everyone, and welcome to XM Live here in the advanced room and from all over the world who are watching us over social media. This is the Traders Talk. Once every month, we are talking here from traders all around the world. We want to hear their experience from their view, from their country where they're living on. And this week, I am really, really pleased to have Krunal Rindani here with us. And Krunal, please let us know who you are, where are you from, and yes, a little bit about you. How did you become a trader? What do you do today?
Hi, Gil. Hello, everyone. Hi, traders. I hope you are all doing very, very, very well. I'm Krunal Rindani. I'm from Mumbai, India. I've been trading for around 8 years now. And essentially, I started out in content marketing, and then I traversed through the hills of trading and finance, and now I'm here, as a trader, as someone who's been trading for this long. Primarily, I trade with price action, swing, and positional, and I trade a lot of assets. And I'm looking forward to talking more about my journey here, and hopefully, I'll be able to share some interesting tidbits.
So you said and by the way, I want to welcome all the viewers from all around the world. If you have questions, you can put those questions into the chat functions over social media or directly on the website on XM, where you can by the way, join us every single day on 3 different channels where we trade live. So just feel free to ask any questions. But Krunal, you said you are trading around 8 years now. But as I understand, you grew up already with trading. This was all the time around you, right?
Correct. So my father is a trader. He's a very passionate trader, and he's the one who got me started in the world of trading. Earlier, I started with content marketing. That's what I thought I'd do. That's what I felt my calling was. And then one day we were talking about finance, and he said that, hey, have you ever thought about how the markets work? And I, of course, being the curious chap that I am, asked him that, no, please do enlighten me. And then he showed me how the markets work, what the basics of trading are. And then based on that, I thought, hey, this is quite interesting. So he picked upon my curiosity, and then he basically enrolled me for this 2-day seminar. So I attended that. I always had that fear in my mind that, trading and finance and investing, they're all super intimidating and they're all super confusing. But the more I learned, the more I realized that A, they're extremely important, and B, they're really not that hard. And once you get the hang of things, once you actually understand the basics in the right way, that's when you realize that it's all very intuitive and it's all actually quite simple and logical. So once I got a good idea of that, I slowly and gradually started my journey into analysis. So first I started analyzing the markets, and, I used to assist my father in his analysis, and I used to bring forth trading opportunities to him, swing and positional. And then once I turned 18, which is when I can legally start trading, that's when I started trading. So yeah, that's been my journey in a nutshell. That's how I started.
So your father was more an investor, I understand, less a trader or an investor?
Oh, quite contrary. He's in fact still a very, very active trader.
Okay.
He largely trades derivatives. So yeah.
Fantastic. So what did he trade? Stocks or indices? What was his expertise? Is his expertise? Sorry.
Yeah, equities for the most part. Equities and index derivatives. So you might have heard of the Nifty here in India and the Bank Nifty. So essentially options and futures on those, some options and futures on equities as well.
I understand. So did you analyze for him technical analysis, or did you also do fundamental analysis for him?
Technical for the most part. Fundamental is something I learned later on in my career as I learned more about finance. I was still a student back when I started trading. So the more I learned in college, the more I learned with my CFA, the more I understood how fundamental analysis works and how a portfolio is supposed to be constructed. Before that, it was largely technical and price action.
I understand.
Yeah.
By the way, we have here already a couple of viewers. Danushka, fantastic to see you. Luxin, I hope I pronounce your name right. Also, welcome here. And again, if you have any questions, let us know. Krunal, so with 18, you started your own career. Did you start at the same area? Did you start with the Nifty and equities, or did you start with something different?
So you're correct. I started with Nifty. I started with index derivatives initially, and I started off with Nifty, a few of Nifty's constituents that, we can talk about later. Bank Nifty, which is essentially the banking index here in India. So essentially, I was trading options on those. And, looking back in hindsight, you realize the mistakes that you ended up making at that time. So those are all largely, directional trades and largely naked options trades. And, as I learned more, I realized that, hey, there's something called as hedged strategies, non-directional strategies. So yeah, back then it was just unhedged options, directional trades on these indices.
I understand. Fantastic. This sounds really great. So you became a trader with 18. Can I ask you how old are you today? So how many years do you really do it by your own?
So I'll be 26 this year.
Okay.
And I started analysis when I was 16, 17. So yeah, I've been trading properly for a little under 8 years, and I've been analyzing for a lot over 8 years. So that's how I'd put it.
That's absolutely amazing. So today you are trading different things than equities also. What are you trading today? And what is your Now I want to combine here a couple of things. How do you trade? And here I mean, like, are you more a trader from the desktop, or do you trade also on mobile phones? Are you a day trader, a swing trader? What's your style today?
Correct. So my ideal setup when I started was that I wanted a really nice, powerful computer, a couple of monitors. I'm sure anyone who started off trading has that vision that, hey, I want a few monitors. It's so much easier to observe the markets. And that's how I traded for a few years. But then I realized that, a laptop is far more mobile and far more practical. So I switched to a laptop. So from a multi-monitor setup, I went to a single monitor one. And I have two phones, so I just use those as my secondary monitors, if you will. So I analyze the charts on my laptop, and whenever it comes time to place a trade, that's when I use my phones. So, it's easier that way. It's almost like having a device to punch orders. So it's super convenient, and I like to travel a lot. So whenever I'm traveling, my laptop's always there with me. I always have my phones. So it becomes a good remote setup as well.
I understand. By the way, I am old-fashioned. First of all, I'm a little bit jealous of you, that you had really this opportunity already as a child with your father to start. For me, it was always a dream. I felt like really this is way too complicated for me. And I started later on and not from home. I had to learn everything by my own. I made a lot of mistakes. And of course, today I'm quite older than you, so I'm another generation. I'm still not feeling comfortable with a laptop, and I still have 4 screens in front of me, and I trade from home, so I'm really old-fashioned. But it's amazing to see that the younger generation really feels comfortable also with mobile and much more flexible. And ultimately, this is the dream, right? You are living the dream. You are a trader. You have a laptop, you have a mobile phone, you can travel whenever you want, and you can trade wherever you want. You just need an internet connection.
For sure. So whenever someone asks me where I am or where I'm from, I just need to say anywhere with internet. That's where I am. So every morning I end up pinching myself just to make sure that, this isn't a very, very pleasant dream.
I understand. And I see here also other people are jealous that you had really the opportunity already from a child to learn it. I think it's a huge advantage. So are you more a day trader, a swing trader? How long do you hold positions? explain a little bit your trading strategy, maybe.
Sure.
What's your, what kind of indicators do you use?
Sure.
Yeah.
So I started off with scalping and intraday. Options, as I said, that's what I did intraday. Then from options, I went to pure equities. Then from equities, I went to Forex. And this was all largely intraday. Then once I got more caught up with other things, for instance, CFA preparations and such, that's when I thought that, hey, it's time to look at other types of trading as well. So that's when I focused more on swing and positional. That's what I end up doing even now. So most of my time at this stage is into swing and positional trading. So I end up holding my positions for a couple of weeks, a couple of months. Again, I try to ride the larger trend. So whenever I'm looking at charts, whenever I'm looking at a position, I try to understand what the broader trend of it is and if that fits the overall bias. So these days I do try to incorporate some sort of fundamental or sentimental analysis as well. So if the overall sentiment and if the fundamental and if the data support my view, then I'd like to hold that position for at least a couple of months. Earlier, that wasn't the case. Again, as I said, I was more of a momentum-based trader. So I used RSI, I used moving averages, and of course, price action, because no one can escape price action in my view. So I use those. Now it's, again, primarily understanding the overall trend, the overall sentiment, along with those indicators as well. I've not said goodbye to the indicators that I still continue to use. Again, RSI and moving averages. But yeah, now the time frames have shifted. So from 1 minute to 5 minute to now possibly looking at 4 hours daily, even the weekly chart.
Oh, wow. So you're even a more long-term trader than me. What I wanted to ask, how do you measure sentiment? How do you approach sentimental analysis?
So when I say sentiment analysis, I feel it's different depending on the asset class that you're trading. For instance, if we're talking about equities, then we'd have to look at the general sentiments of the public, how the company is doing, whether that sentiment is visible on the charts as well. So in this day and age of social media, I feel it's a lot easier to measure and gauge sentiments because you're able to understand whether the company is in good books, if you will. We know a lot about what the future prospects of the company are, what the tonality of the management is, whether, the outlook is likely to be positive or, if they're being overly cautious and such. So that way you get a fundamental idea of where that particular company might be headed if we're talking about equities. And then I try to sort of tally that up or reconcile that with what we see on the charts. So let's say if the company is hinting towards some sort of a bullish likelihood for the coming 3 to 6 months, then we could try to understand that, hey, is the demand supporting that fact? If it isn't, then technically there's a mismatch. Either the company is being overly bullish or the demand just isn't there yet. And we can observe that for the coming week or so and see if the demand picks up. So typically when it comes to equities, those are the signs that I'd look for. Again, when it comes to currencies, the overall concept is a little different. We, of course, have a lot more tools at our disposal. We can look at economic data. We can look at where the market bias is likely to be on a fundamental level. Gil, I know you trade using COT a lot, so you could also possibly talk about that if you'd like. I'm sure our attendees would love to hear about that from you as well.
They hear a lot about me and the COT report. So today it's all about you.
Right.
By the way, you get a lot of love from social networks from all over the world, especially I think in India. Krunal, you told me that you also started the CFA program.
Correct.
CFA program, for those who don't know, it's probably the most appreciated program in the financial world. It opens a lot of opportunity. Can you tell us a little bit about this program? How hard is it to pass those tests? What do you learn there? And is it really beneficial for trading or is it more beneficial as for economical knowledge, let's say?
Sure. So to me, the CFA program is probably one of the most practical academic learning experiences I've had, because most of what they teach us is related to what we're actually seeing in the markets. So essentially, the program is divided into three levels. We've got level 1, level 2, and level 3. Level 1 is essentially laying the groundwork for the financial world overall. So you learn more about how finance works, what the entire industry entails and such. Level 2 is largely related to, the more quantitative side of things, especially when it comes to fixed income. Again, fixed income securities are usually not something that are very, very hotly traded by us retail players. So level 2, a lot of times people feel that, hey, it's a little bit different from what I've done in the past. Level 3, in my view, is some of the most practical, insightful, level I've studied so far, because it entirely talks about portfolio management. So the different types of asset classes there are, different ways in which we need to analyze those, which metrics we need to use to gauge portfolio performance and such. So this alone should be hint enough to tell our viewers and our fellow traders that this is primarily for investors and folks who are looking at trading or money management on a more portfolio level. So it's not necessarily for short-term traders, those who are looking to possibly capture a trending move and such. It's more so for those who want to manage large sums of money, either for themselves or for clients, or work at an asset management company and such. So in my view, again, it's super practical. It helps us learn a lot about how fundamentals work as well, valuation, a lot about a lot of practical insights that we typically do while analyzing forex, economic events, and currency pairs are actually a part of the CFA curriculum. But again, it's not primarily meant for traders. If someone is genuinely passionate about finance in general, or they're looking for opportunities in investing, wealth management, and such, then I do believe the CFA program is very, very good. But a lot of folks just want to learn more about trading. So, that you're not going to learn about price action in the CFA program. You're just going to learn about fundamentals and finance as a whole. So, yeah, my experience has been very positive. They talk a lot about ethics as well, which I feel is very important in finance. And overall, the curriculum is pretty good. But again, as they say, your mileage may vary.
I understand.
Yeah.
By the way, this is really for the viewers who don't know, but they really want to learn finance. This is the program where to go. And as I understand, and correct me if I'm wrong, you can learn everything online, right? This is everything is, and the tests are also online, or the tests you have to go physical to a local branch?
The tests are physical. Earlier, they used to be on pen and paper. Now you need to go to the center physically, but they're administered on a computer. So it's the first two levels are purely MCQ. The last level has structured responses where you're supposed to type concise answers. But again, it's all super convenient, and it's practically as remote as learning can be.
Okay. And just for the viewers to know, it's one of the hardest exams you can do. I think level 3, only around 18% pass or something like that, if I'm right with the statistics.
So that statistic accounts for the probability of passing all 3 levels.
Yes.
So roughly the probability is around, after the recent fall in pass rates, it hovers anywhere from 25 to around 40% for level 1. And then it's around 40 to 50% for level 2, and a similar percentage for level 3. So when you sort of multiply all those 3, that's when you arrive to that anywhere from 10 to 20% number.
I understand. Quite tough. By the way, for the viewers, also our own analyst, Marios, who has a session in just a couple of hours from now, he also has a CFA certificate, if I'm not mistaken, or he's maybe also in level 3. I'm not sure, but he definitely went through the same program. Krunal, I would like to ask you now a little bit specific local specifics, because I have to tell you the truth. I mean, India today is the most populated country in the world. It surpassed China, I think, just recently. It has huge growth. If I look at the IMF, the World International Monetary Fund, they prospect that India has a growth of almost 6% this year. Very strong growth, very also by population, but also economical growth. It seems a very dynamic country. And I never was there. I wish I would be there. I never visited India. But let me maybe from your view tell us what's going on in India. How is the vibe? Is this growth that you see, is it for everybody or is it just part of the population? Tell me a little bit your experience. Of course, it's not totally objective, but from your view.
Sure. So, I mean, India, of course, we've shown tremendous growth potential. And I think that's something that all us Indians are very proud of, that, you know, when we look at the world talking about India in a very positive light, it brings us great pride and joy. And again, I'd also like to clarify that I cannot speak for everyone, because I come from a certain background, which I believe is I'm very fortunate to come from a privileged background. And I don't want to, speak for everyone, because of course, everyone has a different experience. In my view, though, what we are seeing right now is economic development. I mean, if we're talking about economic theory, if we're talking about what we see when it comes to opportunities that are provided, even to those who are living in tier 2, tier 3 cities, towns, and villages, it's kind of phenomenal to see how technology, infrastructure, and availability to cheap internet has done for the citizens of India. Because a lot of us are emerging influencers. If we look at India as a market, we have our own sort of niche of influencers that are only catering to Indians, only speaking regional languages. In fact, India itself has so many languages. Those regional languages have large, massive influencers. So it's insane what potential we have and how Indians are acting on that potential. Again, that is what I observe from afar, if you will. The one thing that is a little concerning, and again, this is purely based on my experience and what I have observed, is that there is a lot of disparity between wealth. So the wealth distribution is not fair, to say the least. So a lot of Indians are benefiting from the development that we're seeing, while a lot of others aren't. I mean, there's no easy way to put this. It's just that disparity is a little concerning. Again, I don't really have any solutions for it, and I don't even understand the problem very well, if I'm being honest. But that is something that more and more Indians are at least becoming aware of. So that's one thing that I wanted to share. But in general, I do feel that the number of opportunities are increasing when we talk about education and, in general, how skilled Indians are trying to get. I do think that's on the rise as well. When it comes to global competitiveness, that's when I do feel that it's a space that we need to aggressively sort of improve ourselves, because, again, it's a competitive place out there. And I do wish for, India to not just succeed and excel as we have, but also it to be a more broad-based, sort of uptide for everyone, not just for a few sectors or for a few stratas of society.
It's funny that you say that there is a lot of niche markets, for content, for example, because the population is around quarter of the world. So I'm sure a niche market in India is much bigger than the whole market in other countries, because again, the population is so huge, and it's. I have friends who do business in India, and everybody tells that the world is very dynamic. It's extremely fast growing. Also, development of real estate is increasing immensely. And how is it today? Everybody has internet, or the majority, let's say, has internet. And And banking, everybody is available to have banking system in India?
So I'm not really sure about the statistics of internet penetration. If I had to guess, I would say that the majority of folks do have internet. At least the folks that are a part of, the larger society. I'm sure there are folks who still do not have good access to internet. But here in India, we get very good internet, 4G to 5G data for around 300 to 400 rupees. So for those of us who are outside of India, we're talking about $4 or $5 a month for 1 to 2 GB a day with unlimited calling, with 100 text messages per day. So of course, the low cost of this makes things very accessible for people when it comes to internet. When it comes to banking, we have something called UPI. So essentially, it's a very seamless way of payments. And payments have become so digital that here in Mumbai and in a lot of other metro cities as well, I rarely ever have to carry cash. Wherever I go, I just have my phone, I scan a QR code, and I send them whatever amount of money I need to. And it's all done via certain apps, so, Google Pay and a lot of other apps that are there. And it's all digital. So that, in my view, is a very, very, very big milestone for us. In fact, it's a technology that I believe we're also sharing with other countries. So yeah, that alone is very exciting. Recently, we had something called as a digital rupee, which I believe works on the blockchain architecture. So a lot of interesting revolutions coming in here in India. But yeah, let's see how it goes.
How is the mobile world in India divided? Are there more Android users or more iOS users?
So purely based on what I've observed, I think the number of iOS users have skyrocketed lately.
Okay.
But yeah, I mean, due to the sheer number of options available, I feel Android still dominates.
I understand. Now, let's go back to the trader world. So I understand everybody has internet. So really, how is the trader? People are trading, and what is popular in India? Also, of course, based on your observations, what do people trade?
So trading as a concept in India has been integral to the entire India story pretty much, because even if we look back at the history of India, trade has been a very integral part of what we've done and what we've contributed to the global economy as a whole. So regionally, trade is largely related to commodities that are specific to those regions. And this might sound like a very unorganized or a semi-organized market, and it is, but it's also very large. So that unorganized or semi-unorganized commodity sector that is largely based on human networks, where it's more about people. Those are a very underrepresented area of trading, because typically for folks like us, when we talk about trading, it's all digital. It's all on charts. It's all using a broker. It's all using the internet. But the real trading is actually that. In fact, if we look at India's largest company, that also started off as a textile trading company. So trading has been very important. Though when we talk about more modern trading, when it comes to financial markets and such, equities have been extremely important, even more so now. So I believe in the early 2000s or in the late 1990s, India started a campaign advocating for mutual funds and more participation in the equity market. So since then, the sentiments have changed a lot. Earlier, Indians were quite conservative when it comes to investing. So a lot of folks used to, hold a lot of cash. A lot of folks used to keep their monies in an FD, a fixed deposit, which is essentially just keeping it safe with the bank. Now, though, things are changing and equities are looking at massive participation. And I believe since COVID, COVID brought markets to the headlines of pretty much everyone's phones and computers and newspapers. So I believe that has also led to an increase in participation. So a lot of traders new traders were born out of the COVID lockdowns that we saw. Again, largely in derivatives, options, equities. And I believe there are very two distinct group of traders or market participants here in India. One group is happy with trading and very eager to trade regardless of their profession or their involvement or their background. So you will have folks who've got nothing to do with finance and they love trading. All they'll do about is, all they talk about is trading. They're very passionate and many of them are working towards it in the right way. And then you've got finance professionals who have studied finance all their lives and they end up being very conservative, where they'll shy away from anything that is related to the financial market. So I think there are those two very distinct groups of people. But yeah, otherwise, I believe Indians in general, as a whole, I believe we're attracted to opportunities. So wherever we find a good opportunity, that's where us Indians would love to trade.
We have here a question from Danushka, and he says, "What is the reason for you to choose price action for trading analysis, while the most new traders follow trading strategies like, Danushka, I don't know what you mean here, SMC and ICT. You know what is SMC and ICT?
Sure. Okay. So this is the question we get very often in our webinars as well. Essentially, they're talking about why a lot of folks prefer price action over these newer age strategies like smart money concepts and such. My response to that is simple. SMC and practically any other strategy that you'll find that is based on that or based on demand and supply is essentially price action in disguise. Because if we think about demand zones, if we think about what SMC tries to do, it's practically price action with a few concepts that are different, with a few names that are different. So I do believe that they're essentially the same thing, especially when it comes to understanding the market sentiment. Then, of course, there's a matter of personal preference. So I believe that, any type of price action is price action, whether you're considering reversals, whether you're considering supports and resistances, whether you're considering SMC and such. So I just classify all of that under price action.
I absolutely agree with you. For example, market profile was already a thing in the 80s. And then it got out of fashion, and in the last 5 years it comes back. So you can see in the world of trading, things get very popular, and then and normally people understand because it get popular because it seems obvious it works, but then when they start to use it and then they see it's not so easy to work. But I totally agree with you. In the end, everything is price action. Correct. It's just called different. Marketing-wise, it's called differently, and you do it something new out of it.
Right.
I want to go back to the Indian markets and ask you about the Nifty. So the Nifty, for those who don't know, this is the Indian stock indices, the main stock indices, and it has 50 stocks, right? That's what I think is right.
Correct.
Before we do that, before we talk about the Nifty, and then I would like also to talk especially about gold, because our viewers are crazy about trading gold, and I know gold is extremely important in India. I want to come back to the Nifty 50. This is how it's called. It's a cool name, by the way, I think, Nifty 50. What are the main sectors there? What is India, I don't know, producing, exporting? What is the strongest sectors?
Sure. So there are a lot of sectors. I mean, when we talk about which sectors are in demand, I typically just look at the price charts as a proxy to that, because again, I feel that whatever data we're likely to see is going to be visible on the charts. So when it comes to the Nifty 50 specifically, generally, it's around 35 to 40% BFSI. So that's banking, financial services, insurance and such. Those are usually the top constituents of the Nifty 50. And by the way, in case anyone's curious, the Nifty 50 is essentially the top 50 free float market cap weighted stocks in India. So in case someone is curious about specific names, we've got Reliance Industries, HDFC Bank, TCS, ICICI Bank, a telecom major called Airtel, and a lot of others. So again, largely when we talk about these 50 stocks, they're around 35 to 40% BFSI. A lot of energy stocks as well, a lot of tech stocks as well. As we know, India is the hub of technology. So a lot of tech stocks as well. And yeah, that's largely the composition of Nifty. We also have a sister index of the Nifty that's called the Bank Nifty, and another index that's called Fin Nifty. So Bank Nifty is for banks. Fin Nifty is for finance companies in general.
Okay.
So these are three indices that are very popular. Again, derivative contracts are also written on these indices, which makes them even more popular. When it comes to some sectors that are doing well, again, I've observed that metals do quite well here in India. FMCG also, a lot of times FMCG stocks end up outperforming the rest of the market, which kind of contradicts the traditional notion that a lot of people have, that FMCG stocks are very slow moving and their price action is very delayed and very lagged. But that's not the experience I've had. In fact, a lot of times certain FMCG companies will move up 5-10% a day, no problem, and they'll exhibit very strong trends. Some other sectors that end up doing well are PSU sectors, so public sector undertakings. Pharma ends up doing quite well. Certain times auto sector does very well. So again, from what I have observed, sector rotations work quite well here in India. So there are, again, whether we're doing cyclical, whether we're analyzing cyclicalness in terms of a calendar year, so these months are for these sectors, or we're talking about trends in general where, certain times or certain periods are, we see certain sectors doing well. In general, what I've seen is that, let's say 3 or 4 months, 6 or 7 months, a sector will do very well. And then that sector will end up either consolidating or correcting a little while other sectors do well.
I understand.
Yeah, these past three-ish years, 2 years after the COVID crash, we've seen our markets change a lot. And very interestingly, the large caps did well, but the mid caps and small caps did a lot better. So,
oh wow,
yeah, when the broad market does well, outliers notwithstanding, we do see a lot of good positive bullish movement in the mid caps and small caps as well.
That's interesting, because I would say when I look at the global phenomenon of COVID, yes, everybody started to be traders. It's similar like you experienced this in India. People stayed at home, they didn't know what to do, and Correct. They started to learn about trading. And really, the trading world, I think, because of COVID, exploded worldwide. So that's a phenomenon I see worldwide. But when I look at the stock markets in general, and I'm looking mostly at the US markets, I see that the tech companies, and we talk today about the Magnificent Seven, and so they rise, but many, many other stocks are actually not. So you have a lot of sectors, and actually when you look today at the Russell, for example, it's lagging. So the mid and small caps are not doing well so much, if I look worldwide. But you show, and I think this has to do because India is so fast developing and growing that it really takes also the mid and small caps with it. Whereas again, in the US and I think also in Europe, mid and small caps are suffering at the moment.
For sure. So again, it all depends on where we are in the economic cycle
yes.
and the price cycle. But in general, we do see a lot of reforms. We do see a lot of pro-key industry policies by the authorities as well, where they'll try to ensure that a certain industry, gets the chance or gets the platform to grow. Again, perhaps the stability that we see in certain mid caps and small caps may be due to that. But again, in general, I do feel that they've done quite well these past few years.
Okay, fantastic. Now, I want to come to a very special theme. And, since I started to trade, I was always trading gold, okay? But I never understood the fundamentals. And people always told me, if you want to understand the fundamentals, you have to understand the gold and India, because there is a lot of importance in India for gold. It's in their tradition. And people were always saying, I never knew if it's a mythos or if it's real, that there is the wedding season and this pushes gold prices up when there is a wedding season and the Indians buy gold. And so I want to know from you a little bit, what is mythos, and what is the reality? Right. Is there such a thing as a wedding season? And do you really give gold gifts in wedding seasons?
So you're spot on. Gold is arguably one of the most, if not the most popular assets in India. Mm-hmm. And it has been that way. So even when I was telling you about Indians typically being conservative investors back in the early 2000s, gold was still a very leading, investment, a very popular choice among people. And again, it is twofold. Some people like to, buy gold bars, gold guineas, gold bullions and such. Some people like to invest in jewelry. So again, it's something that is almost a part of our traditions at this stage. And regardless of region, India has a very diverse set of cultures within the country. But from what I've seen across regions, gold has been something that has remained the same. So yes, you're right in saying that gold is very popular, and it's in fact considered almost essential for certain auspicious days. For instance, there's an auspicious day called T&Cs, which is essentially marking the beginning of Diwali here in India.
What is Diwali? Sorry that I'm
Diwali. No problem. No problem. Diwali is essentially one of the most important holidays for Hindus here in India, and it's kind of like the most important holiday for Hindus here. Mm-hmm. So there's a day called T&Cs, which essentially marks the beginning of the Diwali season. And on T&Cs, essentially, a lot of households like to go out and buy gold. In fact, I remember reading this statistic some time back that on T&Cs, 20 to 30 tons of gold are bought. I'm not sure how accurate that is, but even if it is slightly accurate, I'd say that the number might actually be a lot higher, because there exists a grey economy and there are a lot of these transactions that are just undocumented. So gold has been very important. And very interestingly, we're also seeing gold 2.0 in progress. And what I mean by that is, up until now, physical gold has ruled the show. Mm-hmm. But now we're seeing a lot of paper gold coming into the picture. So gold bonds, gold ETFs, these are becoming very popular. Mm-hmm. And these are popular because they're lower cost alternatives to traditional gold physical investments like jewelry or like gold coins, gold bullions and such. They are also very easy to, post margin. So what a lot of traders here do is that they'll buy SGBs, which are sovereign gold bonds, and they'll essentially pledge those SGBs as margin. And that way they can trade with those SGBs. So essentially, let's say you have $100 worth of SGBs posted as margin. You can take options trades on that margin that you've posted. So essentially, a lot of folks try to use gold as like a way to, deposit margin, which is also very interesting. So
it's considered real money. That's what I understand here. Gold.
For sure.
It's like, sure. By the way, now I'm sorry that I don't know to pronounce the first name of the holiday that you said, but when Diwali starts,
right?
How is the calendar? Is this a calendar like the Western calendar with January, February, and is it all every year the same date, or is it changing within?
No. it changes. So it changes as per the Hindu calendar here in India. And the dates are, again, towards the end of the calendar year. So, let's say the last quarter of the calendar year is typically when Diwali season will begin. And very interestingly, here's another fun fact for you, Gil. Here in India, Diwali is not exactly a market holiday. So while traditionally, the market is shut on Diwali, but it is open for a couple of hours, and it's called Muhurat trading. Essentially, it's considered an auspicious day to buy assets. So the market is always open for those few, trades for Diwali where people can buy things. And it's considered to be a very auspicious and a very holy day to, make these good financial purchases and investments.
So this year in 2024, when is it?
I'm yet to check the calendar on that one. But yes, it is going to be towards the end of the calendar year.
I'm sure our viewers will love to know it, but then we buy gold, right? Because the demand for gold will go up.
I wish it were that simple, but as the markets have proven time and time again that they don't end up being that simple and predictable. But yes, overall, the wedding season does exist. Gold for demand does go up during that time. I am not sure if there's a statistically significant relationship that you could establish where you could actually trade on that. But it's definitely something that you'd see out in the market.
Maybe something that's worthwhile to check, right?
For sure.
So when people buy gold, they hold it physically at home, or they put it in a bank account, or how, or everybody's different here?
Everybody's different, but earlier it used to be physical. So you've got bank lockers, you've got people literally stuffing their gold belongings in their houses, in their cupboards. Some people like to wear their gold as jewelry. So again, it's all different, but we are seeing an increasing number of people opting for paper gold or digital gold.
Amazing. Wow, I could so much more questions ask you. It's so an interesting topic. And again, maybe because I'm just curious and I don't know enough about India, but it's so an exciting world. Krunal, thank you so much that you showed us a glimpse into your world of trading, your personal world of trading, but also into your country and the traditions, which are very different from the world I know. I think it's absolutely interesting, and yeah, it was a pleasure. Thank you.
Thank you so much, Gil, to hosting you here in India. Please do tell me when you're visiting so I can tell you more about our lovely culture and we can discuss more about how the Indian markets work.
Absolutely. I'm looking forward to that. Now, to all the viewers from all around the world that are watching us, look, XM Live we are on 3 different channels, 8 hours every trading day. There are 12 to 15 experts who show how they live trade, they show their trading strategy, and it's something that I wished I had when I started trading, because I learned a lot of things with trial and error, and this was very expensive. And today you actually have the opportunity to look over the shoulders of some experts and can learn from them and from their expensive lessons that they had to take, and hopefully you don't have to take those expensive lessons and learn faster. So feel free to come in. It's absolutely free. And Krunal, again, I hope to see you soon again.
Thank you so much. Likewise. And I hope our lovely traders and viewers had learned something new today. And I hope I was able to give you a glimpse into the Indian markets and the way Indians trade.
Thank you so much.
Thank you.
Bye-bye.
Bye.